Hello and welcome to the Money Movement. Today we're going to be talking about AER. So firstly, what does it stand for? It stands for Annual Equivalent Rate, and you may have seen it on your bank statements alongside the interest rate you receive. What is it, and why is it often different to the interest rate quoted on your bank statement? Well, that's because of compounding. So when a simple interest rate is applied to an account, the compound interest builds up over the year that you leave the money in the account. And we've done a video on compound interest, so if you think, I'm not quite sure what you're on about, go check that out. Come back to us and then it will make more sense. But compound interest is most easily explained as the interest you earn on the interest already paid. So for example, if you start, you put £100 in the bank and you get an interest payment, not only then the next month does your £100 get interest, but also the interest you earned last month, and that compounds up. That is compound interest. So what AER does, the annual equivalent rate, is it takes into account the compounding effect of whether the interest is paid daily, monthly, quarterly, annually, and it puts the figures through so that you can easily compare bank accounts. So for example, if the interest rate is 1.4% per year, the AER might be 1.5% because that interest might be paid monthly. And with the compounding effect, it might mean the actual effective rate you receive on your money, if you leave it there for a full 12-month period and don't touch it, would be 1.5%, not 1.4. So the banks do this to make it easier for you to understand what interest rate you're getting on your money. But it's also really good for competition because it helps you look at different bank accounts across the whole of the high street, across all the banks that offer them, all the new digital bank providers, and work out who's got the highest AER, and therefore it doesn't matter if the interest is paid daily or annually, you're getting the same interest rate. So that's important. It's about comparing bank accounts. So hopefully next time you see a bank statement and you see AER, you know why there's a difference between that and the interest rate, if there is one, because there might not be, depending on when the interest is paid. But you can see the difference. You'll be able to explain to your friends and family if they want to know, and it will hopefully mean that you can fish around for a better AER for your money and move your funds, switch current accounts, switch your savings account to make sure that your money is working harder for you over the long term. Because as with bank accounts, they're all pretty much the same, bar a few specialities which we'll come on to later in the series. But as long as they're FSCS protected, then you know your money's safe, so you may as well get the best bank account you can with the highest AER. So really hope you found this video useful, and hopefully now you understand one more thing about your bank statement. So as always, if you found it useful, please drop us a comment, let us know, like the video. If you've got any questions, you want us to go further on any of the topics, do let us know. Reach out in the comments, social media, our email, or check out our website, and we'll be very, very happy to do a video on what you think. And until next time, you take care.
Right, AER, take one.
Well, for a start, it stands for AER. Can't remember where I was. Are you getting one of me through the camera?
Yeah. Right, what kind of shapes? Lovely.
Yeah, lovely. All right, let's go again. Last time, mate. It's gonna be a one-shot wonder. If they need to, and you'll be f***ing hell. I'm really sorry about this, lads.